With all those exclusive details, but more comments have started coming in from the White House as White House press secretary says that China is also scaling back oil purchases from Russia following India's suit. Let's go across and listen into what she had to say. If you read the sanctions and look at them, they're pretty hefty. And I saw some international news out of China this morning that they're scaling back oil purchases from Russia. We know India has done the same at the request of the president. The president has also pushed European countries, our allies, to please stop their purchases of Russian oil as well. So it's full court press for sure. And we expect that these sanctions are going to do harm, as the Secretary of Treasury said yesterday. And to understand what the impact will be on the Indian economy and the Indian oil and gas sector, we now have Prashant, Vasisht, Senior Vice President and Co-Group Head at ICRA. And we also have Yogesh Patil, Director Research, Oil and Gas at Daulat Capital. Gentlemen, thank you so much for taking your time out and joining us here today on ET Now. And Prashant, coming to you first then, what kind of impact do you see on the Indian economy on account of surge in crude oil prices in the global market? And do you expect this to be a temporary supply problem which will likely not offset the total impact of OPEC plus supply glut that we are expecting in the global market?
See, the broader implication of constrained crude oil supply is that there would be energy price inflation. Besides crude oil, where we have seen almost a $5 jump in crude oil prices from Friday to now, there is also the indirect impact on gas pricing as well, because a lot of gas that is traded globally, LNG, is priced basis crude. So this would have an impact on both crude as well as the gas markets. We import about 60% of our crude oil from these two particular companies, or through traders or directly, and therefore this would have a substantial impact on the Indian purchasing behavior.
To have an impact on India's purchasing behavior. But coming to you, Yogesh, then, where do you see oil prices headed? Will OPEC plus supply glut overweigh the impact of no Russian supply in the global market, and perhaps will oil prices then fall down going forward?
So to our limited understanding, OPEC plus is scheduled the next meeting in the November. And the news flows are suggesting that there would be another hike of 137 kbpd kind of a production from the OPEC plus. So that will be a kind of a positive for the news in terms of the oil prices, where higher oil prices will have something capping on that side. Secondly, looking into the oil price range, we still believe it will remain in the range of $60 per barrel to $70 per barrel, based upon our assessment.
So that's the view coming in on where the oil prices are headed. But let's also put the spotlight on some important commentary that has come in from Commerce Minister Piyush Goyal, where he's saying that India will not sign any trade deal in a hurry, and India will not accept any conditions of any trading partner of not having relation with any other country. Remember, this is also important for the oil market, because US has put pressure on India to stop buying oil from Russia, and hence in that context this commentary that has come in from Commerce Minister is very crucial. We need to slip into a very short break, but our conversation with our guests will continue. Welcome back. You're still watching Crude Conundrum, and we are in conversation with Prashant Vasisht, Senior Vice President and Co-Group Head at ICRA, and also in conversation with Yogesh Patil. Gentlemen, thank you so much for waiting by. And Mr. Vasisht, I would like to ask you about the other alternative sources of oil that India now has. I understand we will not be able to source from Russia, and hence we will have to resort to other options. But do you believe logistics will be a problem for India, or is that expected to be smooth enough and perhaps will not cause any problem other than pricing, which is expected to rise?
The first point is that we are not ruling out complete supplies from Russia. About 40% of the crude oil that still comes from Russia is from other sources which are not being sanctioned as yet by US. The other point is that we enjoy geographical proximity to the Middle East, with a number of large suppliers that have significant spare capacity even as of now. So the natural, option would be Middle East, but there are other sources as well, including Africa, Brazil, South America, and US.
Okay, so these are the other options that India has. But Mr. Patil, I understand that crude prices, if we look at the broader 3 to 4 year trend, have still declined. But now trading at about $65 per barrel mark. What kind of impact will this have on the earnings of the listed universe, the oil marketing companies, the oil exploration companies? And are you changing your estimates basis the supply disruption that we are penciling in?
So look at the oil marketing companies, and if we look down into the first half FY26 or the FY25, the proportion of the Russian crude which they have processed in the FY25 was in the range of 25 to 35%. So the average discounts which they have received were in the range of 0.7 to $1 per barrel. So every dollar per barrel would be a kind of a loss of 50 paisa per unit, 50 to 55 paisa per unit at a marketing level. So we believe it will have an impact on the EBITDA level of the oil marketing company and on the net profit level also. But it would be too early to change the estimates of the oil marketing companies, and we have maintained the status quo as of now. We are just considering the impact to the range of 5 to 6% on the initial stages, and later on, if the situation continues for the next 6 months, definitely we will think upon the changing the estimates of the oil marketing companies.
All right. So for now, it is too soon to change the estimates, and perhaps if the prices stabilize at more higher levels, the analyst community could perhaps go ahead and change their estimates. But Mr. Vasisht, coming back to you, based on the kind of volatility that we have seen in oil prices, do you expect any rating change for the Indian oil marketing space and the oil exploration space at large?
See, for the oil marketing companies, a lot of their profitability is also coming now from the marketing margins, which remain healthy because the crude prices are down significantly. At the end of March, it was about 77. Brent closed at about 77, and now we are up in the 60 to 65, somewhere in that range. So the marketing margins would support the profitability. Most of the oil marketing companies, or rather all the oil marketing companies, are already rated the highest level on the scale for the rating for the rating universe. So I don't see any change. The profitability remains quite healthy as of now. As for the upstream, yes, their earnings will buoy also.
No change. Profitability continues to remain very healthy. That's the word coming in. But Mr. Patil, coming back to you then, retail fuel prices have not been changed for quite some time now. I believe it's been 3 or 4 years since the last change in petrol and diesel prices. Given the kind of volatility now that crude oil prices have settled at much lower prices as compared to what they were back then, do you expect the government to tweak fuel prices anytime in the short term?
So let me give you some thread. In the last meeting of the oil minister with the all buy side and the sell side analyst in the Mumbai, he categorically mentioned that the government will have very low interventions into the pricings of the petrol and diesel, and also the government will have very cautious call on increase or decrease in excise duties on the petrol and diesel. That's one thing. So on an immediate basis, at least in a near term, we don't expect any kind of petrol diesel price change. That's one thing. Second rationale why it is unlikely to change is that considering the gross marketing margins on the petrol, which is really healthy, about 6 rupees per liter on the spot basis, and on the diesel side, it is again 4.5 to 5 rupees per liter. So I think so. OMCs are earning healthy gross marketing margins on the petrol and diesel. Secondly, the government has given a commitment to the investors that there will be very low interventions on the pricing front and the excise duty hike front. So as of now, on the near-term side, we don't expect any kind of interventions from the side of government on the pricing. Thirdly, I think so, the Bihar election corner was there. Always the investors were speaking that considering the Bihar election, which is scheduled in the next month, there might be some tweaking in the petrol and diesel prices, but we don't see that is going to happen in a near term.
Understood. So you don't expect any change in fuel prices, at least in the near-term basis, the kind of commitment the government has given. But Mr. Vasisht, one last question. I also wanted to assess your thoughts on what the next course of action of the government will be. I understand we have a lot of other options other than Russia, but what do you think the government should do and will do in order to ensure enough availability of oil in the domestic market?
See, historically, India has always abided by the sanctions, so it is fair to expect that there would be loss of some Russian barrels. I think we have very good geopolitical relations with host of other producers, including in the Middle East and Africa, South America, etc. So I think those can be used to source crude in high quantities from other sources to bridge this gap of whatever losses we have in the barrels that we procure from Russia.
So that's the way the oil market is headed. Mr. Vasisht and Mr. Patil, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook for the oil market is and what kind of repercussions will that have on the Indian economy and the entire listed space. But keeping it with the same sector, in fact, Neelkant Mishra, Chief Economist, Axis Bank and Head of Global Research at Axis Capital, believes that the crude conundrum will last for a few months. He also believes that if crude manages to scale past the $80 per barrel mark, it is only then that the Indian economy will be hit. Let's go across and listen in to